Welcome back, everybody. TG here, another video. Hope you guys had a wonderful weekend. The stimulus was passed. The market did not like it at first, dropping very, very heavily and then recovering at the end. We used that dip to pick up a lot of Nvidia, which is about the topic of this video and why I really like Nvidia, and I think it's a strong contender for one of my top stocks for 2021. Before we start, hit that like and subscribe button, and let's jump right in. Now, Nvidia is an American company that basically creates graphic processing units, also known as GPUs, which people love to use in gaming and even the professional market as well, which I really like because they have their foot in their door in both aspects, and gaming especially has been on the rise in the past couple years. But they also have system-on-chip units for the mobile computing and even the automotive market, including deals with Tesla. They're led by their CEO, Jensen Huang, who's been at the helm since 1993 and is still in business now. Now, this corporation has been on an absolute tear since the lows in March, almost 175% gain. The question is, do they have room to run? And I do believe they do. If we go ahead and look at these past couple months, ever since around, August, it's kind of been a little stagnant, increasing about 8%. But it was on a huge tear after a lot of price targets came up when they absolutely blew out earnings. If we go ahead and look at their earnings right now, last quarter, $1.34 billion in profit. Their net profit margins are 28.2%, which is awesome, and they have $2.25 billion cash on hand. Now, this cash on hand is huge because they can use that for acquisitions. Acquisitions like the ARM deal that they are trying to do for $40 billion, making it the biggest GPU acquisition ever. And I personally think it's an amazing idea. Listen to what one analyst thinks.
John, the most important chip acquisition ever. That's what chip analysts are calling this deal, with Nvidia buying SoftBank's ARM for $40 billion, paying $21.5 billion in stock, $12 billion in cash, including $2 billion payable at signing. Regulatory approval may take about 18 months. So why does Nvidia's Jensen Huang want ARM? Well, basically, it really radically broadens his portfolio. Remember, Nvidia is best known right now as the world's largest graphics chip maker. A GPU is a processor that helps generate images and accelerate AI. But now, with this acquisition, Nvidia becomes a big player in what is known as the CPU market too. That's the primary brain in most computing devices. ARM's technology is everywhere, underpinning all sorts of products and devices, from smartphones to tablets to PCs. Here's Jensen Huang this morning on CNBC.
ARM is an extraordinary company. This is the company that built the world's most popular CPU. It has built 180 billion units over its course of its history, 22 billion of it just last year. And so they're in everything. They're in everything.
There are potential risks for this deal, though. As one analyst put it, many of ARM's customers will be up in arms, unhappy that another chip company is buying this asset, though Jensen says that he will maintain ARM's neutral, open licensing model. Also, does this deal really win regulatory approval? That could be a big hurdle, too. Though working in Nvidia's favor, these are two very different business models. Nvidia makes chips, ARM licenses IP.
My current positions in Nvidia, I'm selling some put credit spreads. I've sold a couple for $475, $470, and some for $485, $480. This is essentially saying I believe Nvidia is going to stay above these prices by February 19th, and if it does, I'll collect all the premium, which is about $500 and something. I'm risking about $2,500, so it's about 5% of my portfolio, a little bit more actually. I'm trying to be safe. And just in case this ARM holding doesn't go as well as we think, and Nvidia has some downside, but I'll be continuing to add more and more if Nvidia goes down. We were able to scoop some on the dip today, but I'm very bullish about this company. And if I wasn't using so much margin and my portfolio wasn't currently tied up in other positions, I would be a lot more into it. But as you guys can clearly see, we only have about 5,000 buying power left. So using about half of that on Nvidia seems like a pretty good strategy. And if it does dip more, we will obviously add more. But recently we've been doing pretty well with this strategy, and we're going to keep it up. So that's my current position. Listen to this. Between the blowout earnings and the potential acquisition of ARM Holdings for $40 billion, a lot of analysts have upped their price targets and moved from hold to buy. Price targets coming in as high as 700 with an average price target of 600 does show some significant upside for Nvidia, especially when you look at the fact that their earnings per share continues to increase every quarter, especially with last year's quarter being so significant, over 46% year over year. That is huge for the company, and I think this company has a lot in store. Obviously, there are some inherent risks if this acquisition does not go through. But I do believe that the acquisition will go through, and if it does, you can expect to see these price targets being hit. This is a great company, and with their foot in the door in both the GPU sector and the CPU sector, the opportunities are endless, and I think this company is a solid company that you should keep in your portfolio. Let me know what you guys think about Nvidia below, and I'll talk to you guys in the next video. Thank you. Bye.